Okay, hi, and welcome everybody to live market analysis using supply and demand. This is like one of my favorite presentations to give. And again, it's been the, I guess, the catalyst or the event that actually has changed the lives of many traders who have listened to this presentation before and gone on to become a successful trader. So listen carefully to what I'm going to cover today. And even though you may have heard this before, the market's slightly different every time and you'll pick up new things. So let me begin. Quick disclaimer, you can read that. The key is that everything I mentioned here is for educational purposes only. So here's our agenda. We're going to ask the question, why am I always wrong? And then we're going to go into professional chart reading. You won't find this in any book. And I'm going to cover a little bit about supply and demand. And then we're going to jump into the live market. We're going to cover, since the topic of this day is Forex and futures. So we're going to look at primarily the Forex and futures markets. We'll also look at Bitcoin, gold, oil, E-minis, and the NASDAQ, the NQ. And then I'll open up to audience questions and answers and also share with you how you can take the next step. So here's a picture of me giving a presentation at the New York Traders Expo not so long ago. And I was also recently invited to speak in China at the Bogu Investment Forum. And I spoke along with other ministers of finance from other countries and also other professional traders. Here's a little bit about me for those of you who are hearing me speak for the first time. I've been trading professionally for many years now. And TradeSmart is a trading education business, and we primarily focus on teaching you how to read the market professionally and how to run a successful trading business, including how to develop your own trading plan and strategies which fit your personality and lifestyle. So let's jump into the question of, why am I always wrong? And again, this is a question that kind of you ask at the beginning when you first start trading, and then sometimes later on in the journey, if you don't learn the lessons of why you're having losing trades, for example, then it will keep repeating itself. So you need to ask the question, if you're in a trade and it's not working out right, why am I wrong? So how did I learn this? What I'm going to share with you. What I'm sharing with you is based on probably around 17 years of trading experience, almost every single day in the markets now. And I started out at Credit Suisse, and then I moved to a company called Generic Trading in Philadelphia. And on that trading floor, I was working with a number of other professional traders when I first started, and we were taught a specialist system of trading. And I used to call out trades. For example, we just traded the New York Stock Exchange stocks. That's it. Yeah, that's all we focused on at the beginning. And that's how I started my kind of trading career, just New York Stock Exchange, not NASDAQ, just New York Stock Exchange. And at the open, when the open bell went off, I used to call out trades, and there were two traders on the floor, and they, were up very nicely within the first half an hour, or 10 minutes to half an hour every single day. And if I would call out a trade, for example, I'm going long, I don't know, IBM, they would immediately take the short side of that trade. They wouldn't even look at the charts. How then? I know, because I used to walk by and I used to see, look over the shoulders and see what trades they were in. And, I was the counter indicator newbie trader that, who was always, at the beginning, as a newbie trader, you're on the wrong side of the market. So if you always ask yourself, who's on the other side of my trade? If you don't know, then you're maybe the novice trader. So, if you think about it, most beginning traders are always on the wrong side of the market. So this is what it looks like. And this is why I'm sharing this with you. So the market looks something like this. And you may have learned, okay, this is an uptrend and the market's moving to the upside. And you recognize an uptrend, and then you take your first buy over here. And then you feel great. The market moves up in your favor a bit. And then it starts to turn to the downside and goes against you. And, you think it's going to work all the time, but it goes against you. And you take your first losing trade over here. You look at your P&L, and when it's at a number that you can't bear anymore, you take your losing trade, and then you want to get that money back. You like this is your first trade, and maybe you're down $1,000 or something, and then you double up your position. So I've got the position. It's going down, not up. So you take your second trade over here, and it goes a bit in your favor. So you start to see your P&L. You're watching that, you're glued to the P&L on your screen, which you shouldn't do, but at least not at the beginning. And it goes down a bit in your favor. And then all of a sudden the market runs up again and you close out the trade and maybe you're down $2,000 on this trade now. And you don't feel good about yourself because you've taken your second losing trade. And then you say, well, I got the direction wrong again. It's going up. Of course, it's going. It's an uptrend. Yeah. So you take your third trade over here. And then what happens? The market goes up. And then you come down here and you take your third losing trade. And maybe you're down $5,000 or $6,000 for the day out of your maybe $10,000 or maybe $50,000 account if you're a day trader. And you have to maintain a balance of $50,000, whatever. So whatever it happens to be, you're down quite a lot at this point. So, okay. So you take a step back and you're like, okay, I've been buying up here and it's been going down. I've been selling down here and the market's been going up. So I learned about support and resistance. This is resistance. So I should be selling up here instead of buying up here. I should be buying down here instead of selling down here. I got it backwards. Forget the trend. I need to know about support and resistance. This is resistance. Every time the market comes up here, it goes down. So the market comes up here and you take your fourth trade over here, expecting it to go down. And what does the market do this time? It continues going higher and you take your fourth losing trade. You've just knocked out $10,000 in the morning. And you're like, throw your hands up in the air and you're like, oh my, what am I going to do here? What am I going to tell my spouse? I gave up my day job to trade and I thought it was easy. I did a few courses and oh dear. When I follow the trend, doesn't work. When I follow support and resistance, that doesn't work. And when I buy, it goes down. When I sell, it goes up. Oh dear. How do I figure this out? Just type it yes in the chat area if you can relate to this. If this was you at any point in your development as a trader, if this is you now, just type a capital yes in the chat area. The quicker you're honest with yourself as a trader, the quicker you can progress to the next level. So, most traders, what happens at the beginning is you kind of, those losses are so painful, you want to just shove them away. And then you start the next day afresh. You keep starting the next day afresh, the next day. And then you repeat the same problems, the same issues, the same mistakes again and again. And you keep doing that again and again until most people give up. Yeah. But the ones that continue have to, there you go, Reg, just be honest. Yeah. Because the only way you're going to succeed as a trader is, in other professions. I'll tell you something very interesting. When I used to work at Credit Suisse, sometimes if you wore, a really nice suit or you managed to get, friendly with the right people there, you could move up the ladder. Yeah. It's like who you socialized with, who you went drinking with after work and that sort of thing could get you in the right people. And then you can get promoted, even if you weren't particularly good at, at your job. It's the 80-20 rule. I mean, I saw that, 80% of the work is done by 20% of the people in probably most companies. Yeah, the rest of them are, I don't know what they're doing, but most of the work is done by 20% of the people, 80% of it. Yeah. So as a trader, you can't play those games with yourself. You can't, I'm going to put on a nice suit. Yes. And I'm going to be a great trader because of it. And, the market's not going to respect you for that. You have to be real. You have to be honest and truthful to yourself. That's the only way you're going to succeed as a trader, because it's almost like at the beginning, there's a battle with yourself and you've got to get out of your own way. And you also have to be open to learning ideas and to get comfortable with being wrong and learning from it. My first boss at Credit Suisse, when I was headhunted when I finished, University College London. I came out with a computer science degree, a first class honors degree, whatever. So I was headhunted by Credit Suisse to start, and I was dumped straight into the deep end. Yeah. And my first boss, a guy called Greg, called me over right at the beginning. And he says to me, Simon, this is the best boss you could ever wish for. You think, I was so afraid of making mistakes at the beginning. And he calls me in and he says, Simon, I want you to make mistakes. You're new at the job. I want you to make mistakes because you'll learn from them. The quicker you make the mistakes, the quicker you're going to learn. Don't try to be perfect. People will be forgiving at the beginning because they know that you knew. Make mistakes and learn from them. That's the only way to grow. That's what he said to me. Isn't that a great boss to have at the beginning? So don't be afraid of making mistakes as a trader. At the beginning, make them, but do it when the risk is small, when you're risking a small amount of money, which is why the Forex market is a great market to learn to trade with. And we'll go into that shortly. So these are the things that you need to learn. Yeah. You need to learn about what we call supply and demand. And you need to know, for example, when is this supply level going to cause price to turn to the downside and when is it going to break? You need to understand these things. So let's go a little bit into professional chart reading here. Okay, I believe if you're learning to read the charts using price action alone, that's the candlesticks alone and no indicators, then you only need to learn this. You need to understand pivot analysis, which is our view on reading the trend, okay, using the candlesticks alone. You need to understand supply and demand. Where is supply and demand in that market? Where are those buy orders and sell orders sitting in the market that have not yet been filled? That's what supply and demand is. So price moves between levels of supply and demand. We're going to go through that shortly. And then you need to understand one thing. And I gave, I guess, the inaugural lecture about this quite a number of years ago to a bunch of professional traders called price direction analysis. You can look at a chart and within seconds know which direction price is going. Is it going up or down? And that's important to know on multiple time frames as well. And that's the fourth thing mentioned here is multiple time frame analysis. Basically, it's three things. Think about a chair. If you put one leg underneath the chair, it could be wobbly, yeah, could fall over. Put two, likewise. Three is the first time it becomes stable and it can stand. So each of these things alone, you could build a strategy on, and you can learn to read the market based on, and probably be a successful trader using these. But put them all together, it puts your odds up exponentially. And understand how to use multiple time frames. For example, if you're in an uptrend on the hourly chart, but you're coming up against a supply area on the daily chart, that might not be a good area to buy in. So you have to know what the odds are there. Maybe yes, maybe no, but you may not want to initiate a trade there because that's where the trend may come to an end. So this is an important, if you just cast your eyes down here, this is really important. The charts are going to teach you all you need to know once you have a framework for reading them. No gurus needed, no need to rely on anyone else. You can start developing yourself as a trader to be self-reliant. I've never met a successful trader before who just copies someone else, who relies 100% on someone else. You need to be able to make those decisions and stand on your own 2 feet, to be independent, not dependent. So we teach all our traders to become independent. We have traders that are trading many different styles on different timeframes, different markets, and they're all successful at what they do, at their niche in the market. Some people trade the NASDAQ at the cash open, at the US market open. Some people trade on the longer term timeframes. Some people trade stocks. Some people trade options. Some people trade futures. Some people, there's many different ways to do it, but you need to have a basic understanding of price action, which is what this is, of how if you're using charts to make your decision making. And if you're like anyone else who's ever tried to use fundamental analysis, which is what I did right at the beginning, and found that sometimes good news comes out and you think the stock should go up, but it goes down. And sometimes good news comes out and it does actually go up, and you can't figure out any rhyme or rhythm to sometimes yes, sometimes no. So what I did way back when is say, okay, forget about understanding the fundamentals. If I understand what the chart's doing, who cares why it's doing what it's doing? I need to know what's happening. If I try to put the why into it, then what may happen is like what happened to one of the traders in the trading floor that I was working in once. Good news came out and the stock kept going down and down and down. And he kept buying, saying, well, there's good news, it's going to go up. And it kept on going down the whole day. And he ended up with a big losing trade. So if it was going down as good news, sometimes maybe there's other information out there that you're not privy to, that you don't know of. But the charts don't lie. The chart's telling you where money's flowing. The chart is the price, whatever now is the actual price that someone is transacting in whatever financial instrument you're trading. So the charts are going to teach you everything you need to know once you have a framework for reading them. So let's get back to basics. So everyone knows this is, I'm assuming people have a basic knowledge of Japanese candlesticks here. So this is a hammer and a shooting star. Now, let me ask you this question. Let's focus on this candlestick. And I want you to type it in the room. And if you're watching this at home and you're watching a recording of this, even if you watch this report, write it down on a piece of paper and let's see if you get it right. Is this candlestick bullish or bearish? Now, if you go and look at the books, what do the books say about this candlestick? Yeah. So this is where you really need to focus. Okay. So focus. This is a game changer for many people. Okay. So I see people typing bear with one side typing bull. Okay. Bullish or bearish? Imagine you saw this in the context of a downtrend up in an area of supply, and it'd probably be bearish. Yeah. But there are other instances that you need to learn. And if you don't have a framework for reading market, you won't know what to do with this candlestick in those circumstances. So let's take a look at and ask the same question here. This is an hourly chart of the dollar Swiss, the Swissy. And you can see over here that the market's moving up. 1, 2, 3, 4, 5. On the 6th bar up, we have a candlestick like this. Is this bearish? Just type yes or no in the chat area or write it down on a piece of paper. This is, is this candlestick bullish or bearish in this scenario? What are we doing here? Are we buying or selling? If we're in the buy side, are we staying in, or are we starting to get out, or are we selling? What are we doing here? So let's have a look and see how the market plays out. So right there, goes up a bit more. Now the question is this candlestick bullish or bearish? Well, let's see what happened. Yeah, so this is why you need to understand what's going on in the charts. Most people see this candlestick, and myself included at the beginning, and I think it's a sell. And guess what? I used to sell. I used to at least get out of a long position. And then I used to watch this go higher. And I'm like, I've left all that money on the table. It just keeps going. What's going on here? So most people do think this is bearish. This is a trade we actually called out in the trading room. We said, buy target 1, target 2, and beyond. Now, why? Now, let's go over the framework that we have. We have 3 things. Let's look at, without going into detail, let's look at the first one, trend. So here the market comes down and puts in a higher low, comes up and puts in a higher high. So the market is moving upwards in terms of trends, in terms of the pivot analysis. So that's a point to the buy side. Okay, let's take the second thing. Let's look at price direction. So the direction changes to the upside here, and we're still pointing up over here. So I look at the market and I know direction is up. So direction's up, and from a trend perspective, we're moving in the upward direction. Now let's look at supply and demand. So you can see I've got zones. These are these lines here. These are zones. And you can see where this is a supply area. So what happened when the market hit here? We went down and then we broke it. We came up to the next area, came down and carried on. What happened here? This is supply. That's the market came down here. You see that? Market came all the way down when it hit this level. But over here, what happened is it pierced through it. That means there's no more supply here. So if I want to sell, the only reason why the market will ever go down is because supply is greater than demand. But here we know that demand is greater than supply. We just took out the sell side here. So I know supply is greater than, demand is greater than supply in this scenario. And where am I location wise? I'm between supply and demand. I've got now demand beneath me, which was once supply, and supply above me. So from a supply demand perspective, I'm closer to demand here now than supply. There's no supply here anymore. The next supply level's there. So 3 reasons why you want to be on the buy side here, and not one single reason to be on the sell side. So the 3 reasons: the trend is going to the upside. Price direction is going to the upside. In terms of supply and demand, we're closer to demand. Now we just took out the supply and we're going in an upward moving market. So we're going to get to the next level. So if you don't have that framework, you've got no idea what to do here. And if you just look at the candles here, oh, it's bearish, you sell. And then you think, oh, well, what's going on here? Why is it going up? So you need to go a little bit deeper. But if you don't have that framework, you'll never be able to do that. If you focus on the market from a, please give me a strategy that works, then you're going to be missing a lot of information, because the strategy doesn't tell you how to read the market, does it? What you need to do is take a step back, learn how to read the market, and then apply the strategy, or then apply the correct strategy depending on market conditions. But if you cannot read the market, how on earth are you going to trade successfully long term? Some strategies will work in certain markets, in trending markets, or in sideways markets, but you've got to be able to spot the market conditions so you can adapt how you trade. You don't trade the same way in every market. Just like, let's use the analogy of driving. You don't drive the same way in all road conditions. But if you don't know how to read the road conditions, that's not going to be a very good thing, is it? If you drive, 100 miles an hour down a residential area, that's not going to be pretty safe for you or for anyone else going anywhere near you. You need to read what's going on. You need to recognize I'm in a residential area. I'm going to slow down. I'm going to drive very defensively. I'm going to be aware that kids may run out, or someone else may run out into the middle of the road when you're driving through, maybe a very dense residential area, as opposed to being on the highway. So you need to be aware of where price is in the charts. Understand what's going on so that you can trade accordingly. Okay, does everyone get that? Just type a yes in the chat area, or if you're watching us at home on the replay, just write it down. Again, be engaged. You'll get more out of it rather than listening passively. Engage yourself. Don't just learn something that I'm going to share with you now and just forget about it. Oh, well, that was nice. Take whatever you learn from here, write some notes, and take it away and put it into practice. Knowledge, we say knowledge is power, but it's not. It's potential power. If you don't do anything with it, it's a waste of time. So don't waste your time. Take an idea from here and put it into practice. Go and investigate this. Go and see every time you see this candlestick on the market, in the market, does it go up or down after it? And they go and figure out, this is what I did over years. And I figured out the rules for it because it's almost the same every time. And the market repeats itself. So once you have that framework, you can understand almost everything a market can do and what the odds are. The odds are how many times does, when this happened, the market go up, and how many times does it go down? Out of 100 times, if 90% of the time it goes up, then the odds are 90% it's going higher when you see this in this scenario. Yeah, you won't know that until you start tracking it. And you need to track it for yourself because it's what you see. And as you get a better trader, if you become a better trader, you start to see the market differently. Does that make sense? You're not the same person now as you were 10 years ago. Yeah. As you go through certain experiences in life, whatever they are, you've got life experience. If you go through certain experience in the market, you've got market experience. And the way you look at the market with more experience is going to be different than without it. So let's go through supply and demand. Let's go through very quickly this. So what is supply and demand, and why is it so important? So these are the fundamentals, and no one can argue with this. Price moves higher when there's more demand than supply. Okay. Price moves lower when there's more supply than demand. Okay. So up when there's more demand than supply, down when there's more supply than demand, and sideways when supply and demand are in equilibrium. So price can only move up if there's a more willing demand at a certain price level when there's willing supply, when there's supply. Say you've got inventory at $10 and you've only got 10 units, but you've got 20 people that want to buy. And the next units after that are at the higher price of $20. So you've got 10 at $10 and 10 at $20. And you have 20 people that want to buy. Well, half are going to buy at $10 and half will buy at $20. So price will go up since there's more willing demand than supply at that level. So once the inventory is gone at that level, prices will go to the next level and the next level until it doesn't. That's how the market works. That's how any market works in terms of price. It's a supply demand equation. So what moves markets? Well, you might think it's news. You might think it's geopolitical events. You might think, well, yeah, that might be the catalyst that causes imbalances between supply and demand. But ultimately, supply and demand cause the market to move. What causes supply and demand imbalances? Well, does it really matter? If you can spot the imbalances in the market, does it matter what's causing it? Today, it will be whatever's in the news. Tomorrow will be whatever's in the news tomorrow. The next day, it will be whatever earnings this company's reporting. Who cares? What difference does it make? What's causing it? If you can read it, it doesn't matter. Today, the markets, the news is great. They should call it the olds because it's, after they call it news, plural of new, yeah? But it's nothing new. It's happened already. It just happened recently, yeah? So the news reports, the markets went up today because of, and whatever the reason was. What you really want them to do is tell you, the market is going to go up today because of, well, no one will ever do that because they can't. So they only tell you after the fact why it did. And then you're going to try and figure out in the future something that hasn't yet happened, why it should happen based on I don't think it's a winning formula in the long term. You might get it right sometimes, but I tried this for quite some time and I wasn't successful with it. So that's why I decided, remove the reason why. Let's just understand what, not why. The market's moving up. I want to be on the buy side. Where do I want to buy? How do I manage risk? Where do I want to get out? Is the reward to risk there? And can I do this consistently over time? That's the questions you need to be asking yourself. And then you can get to a level of consistency in your trading. So what's so important about supply and demand? Well, when I first started learning to trade, I was taught the specialist system based on what the New York Stock Exchange specialist was doing. We had an edge because we could spot by looking at the time and sales and the price action, by looking at what was going off on the time and sales, the orders, and the level 2 and the open book of the specialist. We could spot what the specialist was doing, and the specialist had access to more information than us. So the specialist was buying, would be on the buy side. The specialist was selling, would be on the sell side. But what happened was that, the market changed. What technology changed, and the New York Stock Exchange went part computer, part human. The specialist job was done by a computer now. So what we were taught to do no longer worked. So it was back to the drawing board, no longer worked. The good thing about supply and demand is this will never change. So I wanted to trade in a way that wouldn't matter if technology changed. So I've been trading this way for over a decade now, well over a decade, and it hasn't changed. The same things, doesn't matter if there's computers trading the market, or there's algorithms trading the market, or there's humans trading the market. The market moves in the same patterns all the time because those algorithms are based on human beings. Yeah, human beings wrote them. Yeah, some of them could be artificial intelligence, whatever, but the market's quite predictable. And even when they're not predictable, there's predictability in the unpredictable. What do I mean by that? I mean, for example, if you get the market making shakeout moves, going one way and then reversing and going the other way and trapping people on the wrong side, fake outs. That's exactly what they do. They fake you out. They think you think they're going one way and then they reverse. So your job now is to identify supply and demand on the chart. If you can do that, then you can trade consistently. You know where to get in and where to get out and how to manage risk. And you also have to go into on a deeper level. So one of your jobs is to identify supply and demand in the market. So what is supply and demand? Well, you want to look, without going into the greater details, you want to look for areas in the market where when the market turns and you have a big move up. And we define an area of demand. Okay, how you draw those areas, again, that's beyond the scope of this presentation, but I'll show you the charts shortly. And then we're looking for areas where the market drops. We could identify supply. And then you have to go into detail and know when the market's going to turn here or when's it going to break through. In a sideways market, we may go up and down. And what you'll notice in time, if you're looking at sideways markets, is sometimes in order to go up, what the market has to do is break down first and then come back. It's a bit like if you're a runner, yeah? Or if you're maybe you're doing the long jump. What does the person doing the long jump do first? They take a step back to go forward. So the market needs to go down and trap people on the sell side here and then run back and run across the top. You'll notice that's what I mean by a trap. You trap people on the breakdown or breakout and then it doesn't work. It's a fake out. If you know how to read that in the market, then you can be on the right side of the market when the market does that. And you can trade it confidently in the opposite direction in the way that you used to do it incorrectly. How do you know? How did I learn these things? Because guess what? I was trapped on the wrong side again and again. And I thought, well, instead of selling here, why don't I just buy? If I'm getting it wrong 90% of the time by selling a breakdown or buying a breakout, how about doing the opposite? What does that look like? Well, I looked at all the cases, hundreds of trades of where I was wrong and came up with the common factors and then started to extrapolate into the market. I'm like, well, if I'm getting it wrong 90% of the time, I can get it right 90% of the time and do the exact opposite. What does that look like? So you start to shift your thinking to the opposite way. That's how you learn. Once you've got a framework, you can look at the market and learn the market. If the market adjusts, then you adjust with it. You notice things changing. The market's not going to be exactly the same every time. If those tricks are starting, everyone starts to figure those tricks out, they're not going to work anymore. So the market will adjust again. New algorithms will come out and they'll do different things, but you will be aware of that and you'll notice it. If the market starts doing something different to what you recognize, then things have changed and you need to adjust. Otherwise, you're not going to be successful. So what you need to do is to identify high probability turning points in the market. So the caveat to this is recommended that you do go through our trading program, but again, it depends how you learn. I'm going to share with you a way of that you can come and join our live trading room, and for a whole month at no cost at all. If you take our beginning program, you get that. I'm going to share that with you shortly. And then you can watch us do this on a day-to-day basis. Okay, so let's go through and jump into the live markets now, and I'll show you how we look at the markets. So you guys just type a yes in the chat area if you're ready to jump into the live markets, and we're going to jump straight in. So actually, let's start with something topical. Let's start with Bitcoin, okay? We have called, this is Bitcoin futures, okay? So the topic here is futures and Forex. So we're going to look at primarily the futures and Forex markets. But if you understand what you're looking at here, you can understand, the levels, for example. Now, if we go down to a daily chart, I'll just show you this on the daily chart. And why we're stopping here, you see, we're stopping and we've got demand level drawn here. And this is a supply level. This was a demand level. Yeah, it was a level and it became supply, but look how we couldn't get above this area. And then we dropped down, and we call this in our trading room, and look at this level. If you look over here, this was demand, broke down, becomes supply here. You see that? And then we go to the downside. Now, and you can see again, all these levels, how they're drawn. This was demand, broke down, becomes supply. Why is this, why is this supply? Because it tried to go up and failed. So there's people trapped here buying and it goes down. So when it comes up, they sell and then they don't go above this area. So you have to understand where these levels are. Yeah. So if we have a look at the bigger time frame, let's go up a time frame here. And we'll look on the weekly, we're going backwards here. So this was the top of the market. From a trend perspective, this bar broke the upward move. So you're thinking sell now, and you can see how the market came down to this demand area, bounced up, couldn't get above this area, and then it came down. Went through this area. Once I saw this bar, I said, we're going down to 20,000. I said that in our chat. If we don't go above here, we're going down. And we didn't. And we went down to 20,000. We hit, I think, we made a low at 19,600. This is the futures contract. I think Bitcoin actually went slightly lower than whatever the futures price is here. So that's how you do it. Okay. And again, you can see this here on the monthly chart. This is demand. We pushed up to new highs here. And then the market came all the way back down to this level. Once the market comes back down here, I know this is not going to take out the highs. It's going to turn. Once it turns here, the trend's now over the uptrend, and we're thinking sell, not buy. The market tells you exactly what it's doing if you listen to it. Over here, the market's telling me I'm going down, I'm going to break below here, and I'm going down. Now, I don't think we're finished going down yet. We could do, but the reason why we stopped here was we did stop because that's where, if you look over here, this is around where the contract opened. So it's kind of an interesting price area around the 20,000, plus it's also a demand area on the lower time frame. But this is where the potential where the price could go down to around 15,000. I don't think it's finished yet. So the options here are, we're going to go up, back up here again, but we have to get above this level. And maybe at the end of the day, if we close here, we have to get above the high of this bar. And that would mean maybe we're going up again. But bigger picture, we've still got room to drop to the next demand level. Okay, now let's have a look at a few other markets. And let's go to the euro. Now, this is an extremely interesting market, an extremely interesting move today. And you can see the today move, what happened here. We go on to now, let's understand what type of market we're in on a 4-hour chart. So you can see we're in a sideways moving market, correct? There's the top of the base, there's the bottom of the base. And early on in the day, we were down here at the bottom of the base and the market turned. Come 9 o'clock, 9 a.m. Eastern time, you want to be trading on the long side. So if you look and see what happened here, why? Because you understand the market's basing and we're moving up from the bottom of the base. This is demand. And this is where we were at 9 a.m. Eastern time, we came up. Now the odds are we're going to break this level. And you can see we did. This is a buy. We broke above supply here, pulled back, go to the nooker where we stopped and pull back. The levels are there ahead of time. I don't draw them. This is there ahead of time. This level, we came down here and now we're pulling back again here. So understanding where these levels are. Now, if we stop here, which is 2 levels back, there's 1, there's 2. This is probably where we go to. And if we turn around here, we've got a chance of breaking it. Otherwise, we continue to go back down to the next level. That's how the market moves between levels of supply and demand. You just need to know how to recognize where those levels are. So imagine, as we said before, this was a turnaround the other day on Thursday. This was a buy here up to this level, knowing where to get in, knowing where to get out, knowing where to get in, or if you got in earlier or down here or over here, knowing where to get out, at least as a day trade. You need to know where those levels are, because if you outstay your welcome, it's going to come all the way back down. Imagine if you're in over here and then you wait and wait, and it goes all the way down. And then you get out here thinking, oh no, why didn't you get out there? You can always get back in here, especially if you're day trading or swing trading. Okay, let's go through a few more markets. You guys following? So let's look at the pound, the Great British Pound. Okay, another very interesting market at the moment. And if we look at it on a bigger picture, you can see also market kind of basing apart from this. This was the COVID kind of March 2020 trade when the markets kind of sold off, including gold, which was kind of interesting. But you can see where we are now. We broke this level, then we hit the level below. We bounced up, but we couldn't get back over. Remember, this now becomes supply, and now we're pushing down again to demand, and then we're coming back up. This is how you need to understand how the markets move. And you can see, again, on the 4-hour chart, what's happening. What market are we in? Sideways market here. At least this week, from Friday last week, this week. So the market's here. This is a buy up to here, intraday, from here to here. And however you want to get in that, the move, you see from down here, up. Yeah. So you have to understand where those levels are. And you can see we got an intraday level here. We stopped and we had a pullback. So I know that this will give you a pullback to be on the buy side. As we said in our trading room, don't sell this. And again, if you get the training now, you can go and watch today's session. I said, this is going down now, but don't sell it. Wait for it to turn and buy it and take this trade. This is a nice trade. Even if you did it on the hourly chart, there's your risk, there's your reward up to this level of supply. See this level here, this one. Or there's another level here. It's the same level as this level. Okay, so now it's coming back from below. If it catches, it may go higher. If not, we go down to the next level. That's how the market works. You have to speak to the market in terms of like this. If the market does this, I know what it's going to do next. I know its next move. So you've got two options. It's only going to go up or down or sideways. Yeah, and the only interesting ones are up or down. So you need to know what it needs to do in order for it to go up, and then what it needs to do in order for it to go down. So you need to recognize that. That's called reading the market. Once you know it's going up, then it's just about, as I said before, it's about finding an entry. You need a strategy in order to engage the market, manage your risk, and manage the trade from beginning to end, and make sure you make money consistently over time doing that strategy. But you need to understand the scenario the market's in so that you can trade most effectively. If you were in a trending market, then you wouldn't take your profit here. You maybe take it at the level higher. But since you're in a sideways market, this is your profit target area, at least for today. And you can see it's struggling to get above that area. Okay, let's go through gold, another interesting one. So gold, also, this is a very interesting market at the moment, but again, look at the levels. They work. This is supply. This is where the market topped out. This is demand. This is a previous, you see, there's a pivot here that pushed up to new highs. Look where the market stopped on the way down. It never went below. Came back down and stopped. Went up and stopped. This is supply. This is demand. And now we have a demand level here, but the odds in this is where it gets interesting. If you understand market structure, this is not highly likely to go back up and break. It could do, but it's more likely to go down. So this is where we're looking at the price action on the smaller time frames to understand whether we're going to go down. If we don't get back above this area, then the market's then we know where gold's going. If we hold this area, we're going back up again. If we don't, we're going down here and then down here. So it's important to know the market's what I call in a decision-making phase at the moment. So you need to wait until it's clear which way it's going. At the moment, it's not. So you can trade on the smaller timeframes intraday And even if the bigger idea doesn't play out, you can still be profitable. So you say, well, if it's going to go up, I want to buy in demand at the lowest possible price with the smallest possible risk. And if it goes up and doesn't continue, I'll still be profitable on the trade. You see what I'm saying? And if I think it's going to go down, I want to sell a move up, for example, and I want to take profit. I want to be profitable on the trade, even if the idea doesn't play out. That is a great way of trading. Just think about that idea that you can be profitable no matter what the market does. Doesn't matter. You can be profitable even if the market's deciding if you take the right trades at the right prices, because the market's going to, the people that think it's going to go up are going to take the best prices and going to get in at the best possible areas to manage risk for the move up, and it doesn't follow through, they'll still be profitable. That's what I'm saying. Make sense? Okay, let's look at one more market. For now, let's look at the E-minis. Okay, very interesting. So again, if you don't know where the levels are, and we do, yeah, this is a level, we just went below this demand level. This is supply. So when the market goes up here and you're no longer in an uptrend, which you're not, you're looking to sell. You see what happens the following month? The market went straight up. If you're thinking to buy here, you've got no idea how to read the market. There's no way it's going to take out. I mean, it's almost, the odds are very, very low after this market goes down. So you have to understand how to read the trend. This move down broke the uptrend. So this move up is sellable, and we put in a lower high, a lower low. Now we're in a downward moving market. This is an upward moving market. This is a downward moving market, but we're at a critical level here. Now we take that down the time frames. And again, look at where this is the COVID trade. We went down and this put in a bottom. And if you know how to read the market well, look, right in our level of demand was where the market turned. And right in our level of supply, remember, this is drawn ahead of time. Once the market's like this, once this goes down, I said in our trading room, this is the market tops. You want to sell the move that goes back. It's going to retrace most of the time back up here, and you want to sell it. You can buy the move up, but don't buy it with the view that it's going to take out the highs. Unlikely not going to do it because you're not an uptrend anymore. And again, if you're looking at this and you don't understand why it's not an uptrend anymore, you need to do the training that I'm going to share with you. Otherwise, you'll forever be in the dark. You'll never know, and you'll be looking at indicators, and again, indicators are lagging. Price action's not lagging. Price is price. The current price and looking at the price chart will tell you exactly what you need to know. So when I see this, I'm thinking sell now on the move up, or if I'm thinking buy, I'm not taking out the highs. The odds are low. So here's the move up. And if you're thinking to buy here, you've got no idea what you're doing. So what happens next? We go down. Why? This is supply. We're not in an upward moving market. We're in supply. What do you want to do? If you're not in an upward moving market, you're in a downward moving market now, you just broke the upward moving market and you're in supply or resistance area. What do you want to do? Buy or sell? You tell me. You want to sell. Okay. That's why it went down. Where do you want to sell to? Well, the market's going down. So we said the market's going down to this level. So where does it go? Down to this level. Why does it bounce here? Because this is demand. But it's in a downward moving market, so we're probably going to go lower after the bounce. What does the market do? Goes down again. And this is where we are now. Now, if we bounce, we expect bounces to take us to new lows. Okay, that makes sense? So you need to understand how to find these levels. So you can see, if we took at this level, this is supply. This is also supply. There's a pivot here. Why is this supply? Because this pivot here moved down and took us to new lows. Just like this one did, but this one's slightly lower, so I haven't marked this one, just like this one did. You see that? This one took us to new lows. This one took us to new lows. Why is this demand? Why are we stopping here? Why are we moving up this week? Go left, because that's where the market moved up from last time, from here. It's not the strongest level, so we're getting a little move. And most likely, if we don't come back and hold, we maybe move up like we did here and then go down more. And then if we break this level, we're going down to the next level, which may break immediately because it's not a very strong level at all. And then we go down. And the market goes just like it went up. It goes down the same, almost the same way. It stops and moves up. The same places where it moved up on the way up, it moves up on the way down. Yeah, the territory just going in the opposite direction. So in an upward moving market, you move down to go higher. In a downward moving market, you move up to go lower. Okay, I'll repeat that. In an upward moving market, you go down to go higher and you take out new highs. That's the definition of a trend when you take out the previous high. And in a downward moving market, when you go up, you usually go lower afterwards. So you need to understand which side of the market you're on. Is the market moving up or down? If you're going up in a downward moving market, the market's is going to be short-lived. Your trade's going to be short-lived. If you're going with the bigger trend, then you're going to be the bigger wave. Then you can stay in longer. So you need to understand what you're doing. You're with the trend or against the trend. Okay, let me share with you a success story. And the reason I'm sharing with you is it's not just because I want to sell you something, okay? I want to help you take the next step and get your trading to the next level. And the reason I'm sharing this story of Jane's here, actually, I know she's watching, is because Jane came to me about over 4 years ago with no real knowledge about trading. And she learned the basics from me. And she went from beginner to consistent profits in 3 months. She went through the training that I'm going to share with you how to do, called How to Read the Trend. She went over about 50 times until she internalized it and put it into practice, not just, oh, this is nice training, let's just do it. She did something with it. She put it into practice. And the reason I'm sharing this as well is, she's gone on to become a very successful trader. And now she has her own course she's mastered trading NQ at the Cash Open. So she's teaching other people how to do that. And I'll tell you something very interesting about that training. The people that we have that came in at the beginning of this year to do that training, almost every single person who's done that is now a successful trader. Almost every single one, or they're on the path. But they're definitely in a different place than they were at the beginning of before doing the training. So you can see how someone here took these principles, made them her own, mastered them, and is now teaching some other people how to do what she does. So this is what she says about the training. And listen carefully. I'm not doing this because I want to sell you something. I'm doing this because I want you to learn something of how to do it the right way. Listen to what she says. All I can say to anyone who wants to consistently profit, just do it. That training turned my whole trading around. From that day on, my trading has been so consistent, it's really mind-blowing. Once you understand the levels and can read the trend, you will beat the market every single day. However, the key is follow the pivot analysis using the demand and supply levels and adapt it, listen carefully, to your own trading style. Be very disciplined. Don't be greedy. Stop when you've made your daily profit and you will turn losing trades into winning consistently day in, day out. Simon's training can be adapted to any market. I mainly trade the NQ and the CL. I use my own strategy based on Simon's education. I found the best thing was knowing what you are doing gives you confidence in your trades, and the fear of losing was gone. Trading had become a lifestyle, no longer a binary gamble or nervous hope job. Believe me, it's the best and only training to succeed with. Now, you should read that again, because in there, and again, as I said to you, most people may switch off now and think, oh, I'm trying to sell you something. No, if you just sit and listen and open your hearts and open your minds and just understand what I'm trying to share with you here, read this again. The secrets to becoming, I don't like using the word secrets, but the secrets to becoming a successful trader are written here. That's exactly what you need to do. No matter if you trade this style or any other style, it doesn't matter. You need to do this. You need to learn something, the principles, and then you need to make it your own. You need to adapt it to yourself. And you need to be disciplined, not greedy. And that way you can get to consistently profitable. And then if you want to get rid of fear, what do you need to do? You need to know what you're doing. Most people don't know how to trade. They're trading, but they don't know how. They're following someone else. They don't know why they're taking the trades they're taking or what went into it. You need to make it your own. And then trading can be a lifestyle for you. And it's no longer, you shouldn't be, if you're sitting trading and you're nervous all the time and your heart's racing and everything when you're taking trades, you're not doing it right. That's not how to trade. Trading should be pretty relaxed. You should be confident and understand what you're doing and know what you're doing. If you don't know what you're doing, then you can't, that's not trading. So ask yourself, if you're nervous when you're trading and it's an emotional roller coaster ride, then you're not doing it right. That's not the way to do it. You need to learn how to do it properly. And this is how you should approach it. So let me show you something else. Norman, having been duped in the past to purchase useless courses, I had been reluctant to take the plunge. Having seen Jane trade and indeed having spoken with you, I was satisfied that I was dealing with genuine people and not the charlatans who dominate the online educational space. I was not disappointed. The course was far and away the best online trading education I've experienced. My congratulations to both of you, to both on the course and your sincere efforts to advance your members' trading skills. Now, you can come and join our group of traders. You can speak with them and communicate with them daily. Then regular people just like you are, who have taken, the time to learn what we do here and apply it successfully themselves. And you can ask them, and you can see other people succeeding. And it's very, it shows you what's possible. And if you see other people doing it, you say, well, maybe I can do this myself. These are regular people. We have a guy called Shakur. Yeah. Shakur has a barbershop, but he's now a successful trader as well. And he trades in just before he opens his barbershop every day. He trades the NQ at the open. Plus, he also trades the Forex market. And he trades successful, and he's getting better and better every day because he's perfectly practicing. If you do imperfect practice, you're going to build bad habits, and you're going to continue to reinforce those bad habits. If you don't do it right from the beginning, you're setting yourself up for failure. And I've had many people come through my training that have been trading 20, 30 years minimum without success, jumping from one trading education to the next without having ever learned the principles behind what everything stands on, the foundations. They're learning strategies before they've understood the foundations upon which markets move, price action, if you're learning price action. You don't need indicators. I mean, you can use them if you want. It's quite liberating removing them and just focusing on one thing. If you have too many things on your charts to look at, you've got too many things going into your thought process. The simpler you make it, the more effective it's going to be, and the easier it's going to be for you to execute. Again, complexity is going to get in the way of execution, and you need to be able to execute. You need to be able to see something happening, understand the scenario, and execute, and understand what the odds are, and understand where to get. So that's basically what you need to do. So let me go through this. The best investment you can make in life is in yourself, okay? For things to change, you have to change, as Jim Rohn says. For things to get better, you have to get better. If you're not happy with where you are with your trading, then make a change, but let your knowledge lead to action. And the first action you need to take, if this resonates with you, is start the training. Come and join our trading room and immerse yourself in it. Go all in, don't dabble. Believe in yourself and go and get the results that you want, that you deserve. So this is the next step. Now you've seen a simple and a powerful approach to reading the market. Simple, 3 things you need to learn. And one of them you can learn straight after, now. You can learn it in an hour and a half, how to read the trend. So take it a step further and learn how to read the trend using pivot analysis. And these are the benefits of knowing how to read the trend. You always trade in the direction of the trend. The trend is your friend until the bend in the end. That's usually where it hits supply or demand. We all know when a trend begins and ends, and make sure you're never fighting the trend. It's not a good thing to fight the trend. Make sure you're on the right side of the market, and you'll be able to develop a profitable trading strategy once you understand this, and this alone, or enhance an existing trading strategy. So my invite to you is to join my How to Read the Trend training session, plus the trading room as well. And this is what you're going to learn: how to identify the current trend of the market, to analyze a trend in multiple time frames, exactly when a trend begins and ends, because that's how we get in and out of the market. We pick the market tops and bottoms exactly when the market shows us it's a top and bottom. We don't try to catch falling knives. We wait till the market turns, and then we know it's the bottom, like the bottom of the top of the NASDAQ or the stock market. We saw it as it happened. We said, that's the top. As it was happening, not afterwards, that was the top, has already gone down. We said, that's the top, time to be on the sell side. And how this knowledge will dramatically affect your bottom line, as it's affected all the traders that have come before you and done this training. And it's changed their lives. And it can possibly change yours if you're willing to put the work in. And you'll be able to watch us analyze and trade in the live markets real time every day. We have a weekly preparation session on Sunday, and we trade Monday to Thursday live. Plus, we have our Discord server 24/7. You can connect with other traders and trade with them live anytime you want. You can just connect with other people. You can speak to them. You can ask them how it's going. You can share ideas. You can trade together. You can do whatever you want that's there for you to be part of a community of traders. So here's what people are saying. Simon, this is phenomenal. I've been trading, studying for 3 years. Sadly, it's all been the wrong process. I've wasted tons of money, time, and effort. Yeah, I've actively deleted all those programs, indicators, and now completely focus on what I've learned from your program. It's the only real way to trade, and it makes complete sense. If you understand what you're doing, you can trade it with confidence. He's a successful trader now. Before the program, he was not. He trades successfully and consistently day in and day out. And it's happened pretty quickly from the beginning of this year. Tom, I wanted to say that what you teach in How to Read the Trend training course is brilliant. Before that, I picked up bits and pieces from different traders. It's never joined up. Your course brought it all together in a very structured algorithm way. No guessing needed. The facts jump off the chart. You're a mastermind. And again, you can read the rest of these. This is what you get. And you can read through that. Get 1 month access to the live trading room. This is our Discord server. And this is my offer to you. So join now. I'm going to share with you the link. It's $894 usually, but you're going to get $497 off, which is 1 month in live trading room. $397. Come and join us for 1 month. Do the training, How to Read the Trend, and see how it can help you get to the next level with your trading and your training to become a trader. This is the link, tradesmartforex.com/promo. Okay. And again, it's what you get. How to Read the Trend, 1 month in the live trading room, total $894. And just click on this link and you pay $397. That's what I have for you guys today. I'm going to show you very quickly so you can see the inside of it. So you come to this page, you come to the checkout, you fill out your details, you'll get sent your username and password. You can log in from my website to members, and then you get access to how to read the trend, which is session 1 of How to Read the Market Professionally. You do it here, and the trading room, you enter here. You've got the live trading room here. You've got your daily trading room sessions recorded and weekly here, and you can join our Discord community by clicking here.